Okay, all right, good afternoon. Listen, our next speaker here is Congressman Byron Donalds. Congressman Donalds has been serving Florida's 19th congressional district since 2021. Congressman Donalds is a graduate of Florida State University and received a Bachelor of Arts degree in Finance and Marketing. And the congressman's career led him to Southwest Florida, where he worked in the banking, finance, and insurance industries. Congressman Donaldson was elected to that Florida House of Representatives in 2016. During his tenure there in the Florida House, he served as the Insurance and Banking Subcommittee's chairman in the 2019 and 2020 legislative session. Today, Congressman Donalds serves on the House Financial Services Committee and the House Committee on Oversight and Reform, and we're very happy to have him with us here today. Moderating today's conversation is going to be Jacob Rappaport from StoneX Group. Jake serves as the global head of equities at StoneX, a Fortune 100 company, and Jake is responsible for the company's equities businesses globally, which include wholesale market making, global institutional sales and trading, electronic and outsourced trading. And with that, I'm going to turn over to you, Jake. And again, Congressman, thank you for taking time to be with STA and our members today.
Well, thank you, Jimmy. Appreciate it. And Congressman, pleasure to meet you and be connected today. So thanks for taking the time to sit with us and help bridge the gap between those of us on Wall Street and your peers there in Washington. So before we begin, I've got to ask, we on the trading desk today, we had Chairman Gensler on. We were listening to your peers, listening to the commentary, definitely some Twitter-worthy moments today. What were some of your takeaways from Chairman Gensler in front of the House Financial Services Committee today?
So, I'll tell you, this was a tough hearing for me. Usually I sit in the hearing room like for most of the hearing. But today there's been a lot of stuff running around on the Hill. So I was in and out of the room a lot. But what I can hear early on from him and through some other line of questioning was, I guess I probably want to say like a smugness. Like he's very confident that what he's doing is right and everybody else has to play catch up. And I just think that's the wrong stance of a regulator. The SEC commissioner or whoever it might be, their powers, really come from what Congress has authorized, not trying to, look into to do the emanations and penumbras to find out what he possibly can do. I just don't think it's appropriate. And it's pretty clear he's pot committed to this line. He thinks he has all the authority. And if he ever wants to come to Congress, he just wants more. And I think it's a bad way to go. I think it's bad for financial markets overall. I think it's really bad for the companies that have to deal with him, frankly, at the head of the SEC. And that's my take. And I'll tell you this. That's kind of what I've always heard about Gary Gensler and the I guess the tone and the mood that people feel like when they talk about him, which is actually bipartisan, I will say. But then to see it in live action in the hearing room, it locked in on everything that was explained to me. And I think we have a real problem over there.
Well, I haven't had the pleasure, but you had him in person today and definitely seemed to make an impression. I can tell you in our industry, while we don't see him a lot, we do a lot of talking about him. The conferences that I've attended this year have been packed just with people trying to get caught up. I mean, as you know, in December, the SEC proposed some major market overhauls. There have been a number of folks from wholesalers like us at StoneX to our clients who are the retail online brokers, and even the exchanges have been really aligned against certain proposals that he came out with. I was at a Bloomberg hosted event in March where Gensler was, scheduled to speak, and he came and he made it very clear that, time and again, he said his goal is to level the playing field in the best interests of his clients, the American people. I'm wondering, do you think these proposals, accomplish that, or are we in the industry justified in our critique that the proposals could cause more damage than fix what's already been a pretty orderly and efficient marketplace?
I think it makes our marketplace less efficient, less orderly. I I just don't understand this mindset of like his customers, the American people. And I'm not trying to say that you don't want to make sure that that investors are getting credible information in a timely fashion from publicly traded companies so that you can have orderly information in the marketplace so people can make investment decisions. That's all well and good, everything I just said. What he's doing, which is, in my view, is very detrimental, is he's creating such a regulatory burdensome framework. It's going to drive capital out of the United States. It's going to make it harder for new investors, people with not as much money, to be able to really take advantage of our marketplace. Because if you drive that much capital offshores or out of our country, what actually happens? The rate of return actually decreased. Like, your investment returns are predicated on a robust and thriving economy, robust and thriving capital marketplace, stock marketplace, bond marketplace, etc. But if you squeeze capital out of these markets, returns don't get better, they get worse. And so I think that at the end of the day, what he's doing, I just completely disagree with. I don't think that's the best way to go if you're trying to have a dynamic financial markets industry where you can have large investors, small investors, in betweens, institutionals, companies trying to gain capital to grow. I think it's a detriment to all that. I mean, we should be doing stuff like looking at accredited investor rules and making it easier for more people to come into investments, as opposed to what he's trying to do.
Well, you mentioned, I mean, that's an interesting point you raised with capital formation. And, I think it was as recently as February, there was a meeting to discuss accredited investors. I mean, you, in addition to serving on the House Financial Services Committee, you're also on the Economic Growth, Energy Policy, and Regulatory Subcommittee. I'm curious your views on capital formation, and, what about the impact on small businesses or small companies being able to grow and have opportunities for public investors, like many of whom we cover as clients, to invest?
Well, I think we have multiple issues. One, and this is not just purely SEC, it's also Dodd-Frank. Dodd-Frank policy, I think, has really squeezed bank lending to small business owners, micro businesses. So I think we say small businesses, and most people on Main Street would say, oh, that's somebody who has 6 employees. When I think, just because of the enormity of our economy, like the financial system looks at small businesses as, somebody with 70 employees. So you have small businesses, then you got micro businesses. Those are your mom and pops, and they really suffer from being able to access capital. But one of the reasons for that, publicly traded banks, they have more capital requirements because of Dodd-Frank and other issues. More capital requirements means that it's harder to actually give out loans to fledgling enterprises, et cetera. Why is a bank going to take a risk on that when they could take a risk on the company that they know that's more well established? So you squeeze off the lower end of our economic system from access to capital, things of that nature. I think now, if you're on the other side of things, if you're a company trying to move to be publicly traded, if you want to put out an IPO, you want to raise capital in the public markets, why would you do that under this SEC? That's going to start creating disclosure rules on all these other esoteric things that I guess you could say are nice to know. People might find value in them, but there's not a consistent value across the board from a materiality standpoint. Like, what are the material operations of the enterprise that an investor needs to know in order to make a sound investment decision? So, do I think you have a lot of companies that could go public that don't want to anymore because they're looking at the regulatory regime? 100%. So what does that do? That actually traps a lot of the investment gains, right, wrong, or indifferent. Trap may be the wrong word, but it sequesters it from the broader market, which actually limits a lot of the American people to take advantage of it in their pension plans, in their 401ks, in their IRAs, et cetera. And it's reserved now for if somebody who is of means and has done very well in their lives, who's an accredited, they can be in private placements, they can be in private equity, or the like, or a venture cap firm, or whatever the case might be. Well, because they have so many dollars and so many assets in their own pocket because they were successful, Now, those are the only pockets of Americans who can make an informed decision on investments. I just think that the whole regime is the wrong way to go, because you're cutting off a lot of access to some really important capital that's out there that could be utilized. And invariably, when you have these regulatory systems that get created, it's the little guy who ends up getting cut out more than anything else.
Well, and we talked about accredited investors, and what that definition is, and there's talk right now, or, going back to February, of perhaps raising those limits. I think it's about, $1 million in net worth or 200,000 in income, talking about raising those numbers to protect Americans. But do you think it maybe unfairly discriminates and keeps folks from having a chance to participate in these markets?
Oh, it 100% does. We should be lowering the accredited investor rule, in part we should be lowering the threshold. I want to be clear on that. Or in some members up here are saying, why do we even have an accredited investor rule? It's up to that individual. I'm going to use private placements as an example. It's up to that individual private placement to decide what's the level of criteria they want somebody to be able to come into their investment pool. You know what I'm saying? So if they have to make a capital call, then they know that they can go make the call. Let that be whoever is creating the placement to make that determination. Why is it this regulatory rubric? So there's those conversations as well. But I think by and large, we should be lowering those standards so more people can come in and take advantage of these investments. And let's be very clear, a lot of money is made up front. To be honest, a lot of times by the time a company gets to be publicly traded for a year or two, you can get good returns. I'm not saying you can't, as a recovering financial advisor, there are good returns out there. But the height of those returns are almost always at the beginning. Allow Americans to take advantage of that. Allow them to be in that space, in that game. It could change their lives. It could be for their best interest, for their family's best interest. And if you have a real innovative and dynamic capital framework like that, the possibilities truly are endless.
Well, I think you saw some of that, and during the pandemic in the last few years, and the proliferation of retail trading. It's never been more accessible in terms of, app-based trading at zero cost. And, we see the volumes. Investors are voting with their feet. So I guess the question is for the regulators, are the American people capable or competent enough to make those investment choices on their own, or do we need to protect those folks? And a lot of the conversation today pivoted towards digital assets, where we don't have that regulatory guidance, more desperately trying to find it. I guess going back to December, you saw Elizabeth Warren and Roger Marshall proposing the Digital Asset Anti-Money Laundering Act, and there's been some debate around that, whether are we protecting the American people and their investments, or are we basically outsourcing capital and innovation overseas and driving those investors away from our country?
Well, real quick, I do want to touch on one thing, and this is about, retail trading apps. Like, look, I'm all for that. I think if you could find a way for people to be able to come into to our investment community and actually do something, and you could do it at low cost, okay, fine. That's great. Because I think here's the deal. As somebody who, I had a investment portfolio that I managed, and I had, friends, they would be like, hey, Byron, I got like, 10,000 over here. Can I get some advice? And I'd be like, listen, here's the advice. Keep saving your money, keep investing it. And when you get to a certain size, then come see a guy like me, because to be honest, the fee on what you have is just not going to make any sense. But the baseline thing is you just want to keep investing. And as your pile grows, and if you want to go find more professional advice, you can find that. And there are definitely people in our country with the expertise to go ahead and do that. So I just think we should be allowing that. Again, you got to bring more people in. You don't want to exclude people under this fake guise of protection, because what are you protecting them from? Having more money in their pocket and having a brighter future? I mean, give me a break. Now, to the stuff with Elizabeth Warren, I've seen that proposal. And to me, it's I want to make sure I say this right. It is very frustrating that you would have two senators who would think it's okay to apply the know your customer rules to an industry that largely self-custodies. So know your customer is basically, the framework is basically around, you're putting your money in a bank. So I'm giving the bank $10,000 or $5,000 to hold on my behalf. And because the bank kind of wants to have an understanding and a framework of where's all this money coming from an anti-money laundering standpoint, they need to know who I am. Okay, I understand that. But if I'm custodying my own assets, what am I going to do? Am I going to know myself? No, that's not what this is. This is about trying to find a way for different elements of our government to start creating lists and having more information about what people are doing in a digital asset space that frankly isn't the government's business, because Congress has not affirmatively said one way or the other how this entire space is going to be regulated. So I think policy like that is a bridge too far. Really concerned about some of the colleagues on my side who are concerned. And I think some of the concerns might be legitimate around terrorism and stuff like that, and find ways to launder money for terrorist activities and so on and so forth. But at the end of the day, we have to protect the privacy and frankly, the anonymous nature of our financial system. Most people just transact and do their business, and nobody has really any clue what they're doing, because people are mostly doing it legally, and they just want to build a good situation for themselves and for their family. We have to respect that and honor that, not turn on Big Brother to be looking over everybody's shoulder about what they're doing. That's not how America was created. America was created with people seeking their own interests economically, and then through the construct of individual liberty, we have a criminal justice system. We have a civil justice system. We respect other people's property, and we celebrate their hard work. And in the failure, if failure comes, because failures are a part of life. If failure comes, the how robust our society is and our economy has allowed people to fail and then pick themselves up and find a way to get back on their feet and then move and try to innovate and be successful down the road.
Very well said. Well, Congressman, again, really appreciate you taking the time to join us.
Sure.
Representing the interests of those American people, and we cover. They're our clients we care about, and we're going to continue to try and do the best job we can, and make this market accessible and easy for folks to invest and grow capital and grow wealth. So appreciate you helping us represent those interests in DC.
Not a problem. Thanks, guys, for having me. Really appreciate it. You guys take it easy.
Thank you. You too.